Stocks break a 9-week winning streak and move lower for the week. This is a headline from Wall Street Journal. Ecstasy advocate raises $100 million, and I'm going to discuss two psychedelic companies. One is Atai and the other one is Compass Pathways. We will also look at Treasury bonds, which I think are oversold and are ripe for a bounce. And I'm referring to Treasury, long-dated Treasuries, TLT. And dollar and gold today on Friday reacted pretty strongly to the jobs report, but really moved nowhere. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, January 5th, 2024. As always, hit the like button, subscribe to this channel, make a comment, share this video. All of these actions are what keeps this channel going. Again, thank you very much. I really appreciate all of the shares and all of the comments and all of the likes that I've been getting lately. So thank you once again. Please continue doing that. And if you're a subscriber, stay tuned. We will cover quite a bit of material. Note that market breadth is going to be, for the first time, I think, in the history of this channel, is going to be in the members-only video for this particular week. I just didn't have a chance to fit it into the regular video. Natural gas, Bitcoin, junk debt are also going to be in the members-only video. Stay tuned. We will have quite a bit of interesting setups. For example, C4 Therapeutics, ticker symbol CCCC, as well as Century Aluminum, Cenex, several of the large famous stocks like Palantir, and as well as unknown stocks like Porch Group. Do you know anything about Porch Group? Make a comment. All right. If you're not yet a subscriber, again, consider signing up by going to MasterChartsTrading.com. I will be using my MasterChartsTrading.com price action indicators. You can see them on this chart, this green, blue, red, and yellow lines. They are support resistance indicators available for TradingView.com interface. You only need a free TradingView account to enjoy my indicators. So once you sign up on TradingView.com, head over to Master Charts Trading and sign up there. All right, let's get to it. We're looking right now at S&P 500. So today is the first week of New Year 2024. Happy New Year, everybody. So notice that on the 28th of December, right here, we have basically a high for now. And since then, 29th, 2nd of January, 3rd of January, and 4th of January, we kind of moved lower. So 5 days moving lower, red candles, and finally today we have a green candle. So not really much that happened in a sense of the stocks are, in an uptrend. I am actually personally long. This up arrow is where I bought. I'm going to show you my position. SPY. So S&P 500 ETF SPY I bought actually back on the 23rd of October. I'm up about 12% or so. I'm considering taking some profits just to preserve them, but overall, the long-term trend is up. So any pullback should be viewed as a buying opportunity. And a few days ago, namely on the January 2nd, I put in this line. So this is called a ghost feed. You can kind of see it. Ghost feed. So it's scary sounding, but actually it's just a prediction. So that's what it looks like. It sort of generates this, made up candles. They're not really real, obviously, but I'm gonna just kind of get rid of the yellow stuff so you can't really see anything, and just concentrate on this line with the circles. So far, it's been pretty much following my idea, and I think we are going to come down towards this green line. So currently this green line is around 4626. We're super close to it already. We're like, let me see, another 1% probably. Yeah, about 1.3% away from the green line. So green line, basically, it's two ways to think about it. In a very strong trend, it will act as support. The other use for this line is for take profits. So, for example, I bought S&P 500 here. Notice back on the 23rd, I bought SPY, ETF SPY, and it moved really strongly in my favor. So I'm actually holding still full position. And I'm thinking that if it, gets to this green line, I will probably sell about a quarter, possibly a half of the position to just preserve the profits. However, as I just said, overall the trend is up. So this is the reason why I have this line is to, number one, if you're in a very strong trend, you can actually, buy again at this point. However, if you're just, you can also just take profits using this line. The more important line is this blue line. So I think just based on the experience, I'm looking at this, multiple thousands of charts over my lifetime, and what usually happens is, we're gonna pull. I mean, these are all-time highs, very close to all-time highs, and with dividends is actually all-time high. So I think we're gonna pull back most likely to the green line. We're gonna try to kind of bottom there, and most likely again we're going to at least attempt to move higher towards new records high. If you're a subscriber, stay tuned. I will describe my reasoning behind this particular prediction, because I'm going to be using market breadth, and market breadth currently is slightly oversold already. Okay, so slightly oversold in an uptrend is usually a recipe for a move higher. So most likely we're going to try to bottom around the green line. If we hold there, maybe like a few times we try to pierce through it, so that's 46.28 currently, and then most likely we're going to move higher, into late January. However, I still think that a pullback towards the blue support resistance line, which is currently from today's price action, from today's prices, it's about 5, almost 6%, is quite likely. And unless we just run away to the upside, in which case this prediction will not be true, will no longer be valid. But if we kind of just, try to make a high, kind of bounce around here, roll over, most likely at that point we will continue lower towards the blue line, which is currently around 44.24. So from today's prices, that would be around 6% down. And I think that would be somewhere around March, early March of this year, 2024. So this is the best I can kind of, think about predicting. I don't really like predicting, but sometimes it's kind of fun also. So I think that this is the best I can, kind of offer at this point. Overall, the picture has not changed. We're definitely in an uptrend. There is no signs, not a single sign of a turnaround. We're firing on all cylinders in a sense of there is no divergence between various securities that I monitor. For example, so S&P 500 and high yield bonds are moving together in lockstep, and this is exactly what I want to see. I want to see high yield bonds, junk debt, and stocks move together in lockstep. Market breadth is not, there's no divergence. We're moving when stocks are moving up, majority of stocks are moving up. When stocks are moving down, majority of stocks are moving down. So again, there is no divergence. There is some saying, people are saying that you know, the FANG, whatever, the Magnificent Seven stocks, like, you know, Apple, Tesla, whatever, you know, those big ones, they produced the majority of the rally. But I actually kind of disagree with that, and I'm just going to show you why I disagree with that. So let's look at briefly weekly chart. This is weekly S&P 500, and we're looking currently at weekly chart. So with dividends, again, so down below here where it says ADJ, it's adjusted for dividends. So this is ETF SPY. With dividends, we're at record highs. I can uncheck this, and you can see we're not yet at record highs. So this is record highs from January 2022. We barely got to them and then pulled back. But with dividends, we are actually at new records. Okay, so just look at this chart here. All right, so with dividends, S&P 500 reached new records. We can look at what's called equal weight. Equal weight S&P 500, ticker symbol RSP. All right, and notice that we're there. We're also there. We're like right next to the records. So what I'm trying to say is, yeah, you know, a majority of stock market gains came from you know, large, maybe gigantic or humongous stocks. But even, you know, an average stock within the S&P 500 also helped. So there is, see how there is no divergence between RSP, this ticker symbol RSP, and S&P 500. We're next to records or at records for both of them. All right. So yes, large cap stocks, mega caps gained more, but even the average stock within the S&P 500 also gained quite a bit. And so again, this is showing me that there is no divergence, no bearish indication yet that we're going to roll over. When or if that happens, it will be pretty obvious, but not yet. So for now, our thinking is up. We're thinking we need to be buying, we need to be looking for buying opportunities. And this pullback, even if it materializes, which is not necessarily going to happen, but if it does materialize, then it will become a buying opportunity. All right. So let's look for a slight pullback and then perhaps a new rally to new records. So this is so far as we can say about the stocks. I wanted to highlight some of my favorite and interesting stocks, and this is a Wall Street Journal. I'm not making it up. And this is a headline: Ecstasy for Medicine advocate raises $100 million. That's a pretty large amount for a basically a drug dealer, you know, illegal drug dealers, right? Because this is you know, still Schedule 1. It's not even Schedule 2, but just you have to kind of put it in perspective. I'm a pharmacist. I worked for many years as a pharmacist. In my pharmacy, in a pharmacy where I used to work, we had cocaine. Okay, because cocaine is actually used for you know, as a topical anesthetic. All right. We definitely did not have any, you know, mushrooms or ecstasy or LSD because they're Scheduled 1, okay? So cocaine is Schedule 2 because it has quote-unquote medical uses. So now we're seeing this stuff, ecstasy for medicine, is becoming a mainstream reality, all right? And the data is actually pretty good, and you know, we can see significant improvement for people who are depressed, who have especially post-traumatic stress disorder. And this is where I think is going to come in when it will become very mainstream. The post-traumatic stress disorder will become very relevant because we have military. So I think military will become very interested in this type of thing because obviously soldiers get injured and they have the stress, post-traumatic stress disorders all the time. So military may just want to consider this as a quick way to return those soldiers back into the you know, to the military units. And I think when that happens, this will just skyrocket. So in anticipation of multiple things, for example, decriminalization to begin with, but at least rescheduling and rescheduling of psychedelic drugs into at least category 2, but ideally into category like 3 or 4. I think that would become a major driver for this type of stocks. So in anticipation of that, I am looking at certain stocks which were actually mentioned in this article. We have Compass Pathways, and we have Atai Life Sciences. So I'm going to go over those two stocks. So Compass Pathways, I actually own it. I just bought it. And why did I buy it? So this is this is the essence of the way we trade here at Master Charts Trading. So this stock really didn't, nobody really cared about it. I mean, look at it. It's been down for multiple years. It went up as high as like $49 back in 2021. But since then, nobody really cared. In fact, this stock, Compass Pathways, just hit an all-time low where I'm hovering. This is an all-time low on November 13th of last year, 2023. And then it moved higher. And notice where did it move to? It moved above this blue support resistance line, which implies a new uptrend for a stock. Okay. So as of right this instant, I'm treating this particular security, Compass Pathways, as being in an uptrend. All right. Why? It's a different story. But I mean, stories like this in Wall Street Journal that mention that particular stock definitely is a plus. All right. So right now, I'm seeing a new breakout for this psychedelic firm, Compass Pathways. This is actually British. Surprisingly, they're ahead of America, in this whole movement. So this is what we're looking for. We're looking for a breakout above the blue support resistance line. And I really like this kind of pattern where we have basically a very flat consolidation for multiple years. I mean, look at this. We just kind of traded nowhere. And then notice how the lines, they were so wide apart. This green to yellow lines distance was huge. For example, here it was like 200%, $28. But now that distance is very low. It's only like $4. Okay, so the big difference. And the price had a very easy time of, going from all-time lows to basically a new uptrend. So I'm looking for hopefully a quick move higher, and the pattern does support this type of move, and this is the pattern I'm referring to. So we have a move up. Now we're going to most likely have a sideways to possibly down consolidation, and hopefully we'll see another move up. So of equal or higher to the previous move. So I'm targeting somewhere in the $13 area, and it's currently around $9. Hopefully higher. We'll see. So that's Compass Pathways, again a psychedelic firm, and very important. I think is going to become quite important. I think in the next few years possibly. I think this has a potential to revolutionize medical practice, psychiatry, psychology practice. Psychedelics will have most likely a strong effect on those fields, and as I mentioned before, eventually organizations like military will become interested in treating their post-traumatic stress disorders. Another stock that was indeed mentioned in this article is Atai Life Sciences. There it was mentioned right there. So Atai Life Sciences also, I believe, I think it's also UK, United Kingdom based startup. So notice what's happening here. So where is a Compass Pathways already broke above the blue support resistance line, meaning that it's already in an uptrend. The the other one, the Atai Sciences, hasn't yet broken out, but it's super close. Notice how close we are. We're about to break out into a new uptrend. All right. And notice again, I like this type of patterns, very long consolidation, and really nobody cares about this stock. I mean, these are all-time lows. However, it used to be pretty, high flying. Used to be $20. Now it's like $1. All right. So a breakout here has a huge potential. I mean, we could go to new. Even if it doubles here, it's already a pretty nice move. And notice again the way the indicators are curving down. So here the distance between the indicators was like 142%, $2.50. Right now this distance is much less. It's 77%. So it's like more than half, or rather much less than before. So I think the breakout for this one is also looming. I mean, provided nothing just drastic happens. But overall, this looks like a potential new breakout. And once again, psychedelic medicine will become, I think, most likely a major player in the medical field and especially psychiatry. So look out for that. What do you guys think? Make a comment. It's important. This is an important subject that I am very interested in myself. Moving on to more conventional securities, we're currently looking at TLT. I haven't featured this in a very long time. Treasury bonds, 20+ year Treasury bond fund. Up until very recently, you can see it was below the yellow line, meaning that it was in a downtrend. We were not interested in it. However, notice that we have now a new uptrend for Treasury bonds, for the long-dated ones. So uptrend for Treasury bonds implies downtrend for yields. So yields are going to be coming down as the Treasury bonds rally. So right this instant, I'm just giving you a setup. This is a free setup. You don't need to be a subscriber, obviously, because I'm giving it to you right now. So already a breakout has occurred right there on the 14th of December because we closed above the blue line. That's actually all we needed really to know. We didn't really need to know anything about anything. That's all I really needed to know. Now, right now we came back down. In fact, right now we're below the blue line. So let's see how low we will drop, but I would be thinking about buying it. So Treasury bonds, long-dated Treasury bonds, they don't move as much as stocks. They do provide nice, what do you call it? Nice dividend or coupon. I think the bigger deal about Treasuries is the fact that they are poorly correlated to the S&P 500, or I would just say uncorrelated completely. So notice down below here, if not negatively correlated. So down below here, you notice this yellow indicator, which is basically all over the place and sometimes even more negative. So what does this mean? It means that bonds correlate negatively to the S&P 500. In other words, if S&P 500 goes up, Treasury bonds usually go down, but not always. So for example, lately, our correlation coefficient was actually quite positive. It was 90% of the time. So S&P 500 and Treasury bonds were doing the same thing about 90% of the time. But looking at historical records, it's not as clear. Usually, quite often, actually, they're doing the opposite. So let's see where this gets us. But I think Treasury bonds are going to be, trying to bottom here, and then again a new leg up. Rally higher. So this implies lower interest rates in the weeks and months to come. So again, what do you guys think about Treasuries? Do you think it is a buy? I think I would be buying it. I would be probably buying it even now, but I want to see how low it will go, and like maybe it will bottom here, and then we'll see if it rallies. But overall, I'll be buying it even right now. All right, let's switch gears. We're looking right now at dollar currency index, DXY. So dollar currency index, technically speaking, is in a downtrend. Notice this downward facing arrow on the 14th of December. because we closed below the red line. So for a Forex, gold, oil, natural gas, Bitcoin, things of that nature, commodities in general, we're looking at the blue and the red line as markers. So if we're above the blue line, we're in an uptrend. If we're below the red line, we're in a downtrend. For stocks, we look at blue and yellow line. So because this my system gives a benefit of a doubt to the bulls. In other words, for stock bulls, or rather, let me phrase it. In other words, because stocks, generally speaking, over many years tend to go up, I give the bulls the benefit of a doubt. So that's why I moved the stop to the yellow line. So like, for example, for S&P 500 ETF SPY, when I bought it here in October, my initial stop was at the yellow line. Okay, but once I got see where it says moved stop to entry, so my initial stop was at the yellow line, but once we got the target, I moved my stop to entry. So this maneuver will guarantee you that you will not lose money. So that's the important part of it. However, for dollar currency index or any Forex instruments, we actually use the blue and the red line. So right this instant, we're looking at dollar being in a downtrend. So notice this action here on 27th and 28th of December. All right, I'm not making it up. These lines are mathematical. Okay, I can turn them off. Okay, I'm not drawing those lines in. But notice what happened. We touched this blue line on the 27th, and then again on the 28th, and then rallied. Okay, this to me shows that yellow line acted as support. All right. And then we had a pretty strong rally. For example, here on the 2nd of January, it was a pretty nice, green candlestick. And then right now, we are retesting this red line. Again, 1, 2, 3 times. On the 1st and the 3rd of January, 4th and 5th of January, we have touched this red line. We actually pierced it several times. And today was a big one. Notice this big candlestick. I'm going to turn off. Notice this huge candlestick. I mean, this is a spinning top candlestick. So what do spinning top candlesticks imply? Indecision. The bulls wanted this to go up. The bears wanted to go down. At the end, nobody really won. We just kind of stayed around the same area. So indecision. Yes, this job report was great, but other reasons for bears and bulls, they really battled it out, and really nothing happened today. So right now, still technically speaking, dollar is in a downtrend, but maybe this whole support around the yellow line, a strong rally, an attempt to go above the the red line, maybe we'll break above it and continue back up to the blue line. So I am not 100% of what's happening with the dollar, and by extension what's happening with gold. So let me look at gold. Again, why do I care about dollar? Is because gold is traded in dollars, so gold divided by US dollar. So I just showed you dollar, right? It was technically speaking in a downtrend, but all of a sudden now started to strengthen. All right. So if this dollar is strengthening, so this bottom part of this equation, USD, is getting bigger, fatter, bigger, it is going to pull this currency pair lower. Okay. Did that make sense? Make a comment if you didn't understand it. I'll try to explain it again. So if dollar strengthens, it will pull this currency pair further down. Okay. So coupled with the fact that we had this just giant possible rejection candlestick on Monday, the 4th of December, where I'm hovering, it went to all-time highs. This is gold. Went to all-time highs, but then sold off badly. Okay. This is a shooting star candlestick, and it's a rejection of higher prices. Okay. So technically speaking, again, this is actually a latest alert for gold. It was bullish. And you probably made a little bit of money, but by now most likely you've been stopped out. Today you probably were stopped out. If you bought it on the 14th of December, if you bought gold here, it moved higher, you got your target right there, somewhere around 28th of December, and then we pulled back and you probably got stopped out. So for now, we're just, we're in this battle. Dollar is trying to go higher, and by extension gold is trying to hold the support, but anything can change on a dime. So right now I am actually not 100% sure what's going on with gold and dollar, and so I'm just sort of watching it. I'm not really trading it, but if dollar rallies, even a little bit higher, gold will collapse. Gold will continue lower. So this is the best I could offer at this point as far as gold and dollar relationships. What do you guys think? Do you think gold will go up? Do you think dollar will go up? Make a comment. And that's it for this week's recap. Again, if you are not a subscriber, then or rather, if you are a subscriber, then stay tuned. Again, market breadth, natural gas, Bitcoin, and junk debt, in addition to all of the various ETFs, large cap stocks, and a bunch of small cap and speculative stocks are going to be covered in the members only section. If you are not yet a subscriber, sign up by going to masterchartstrading.com. Sign up one of the products. I have trading indicators, so these lines on the chart, you can have them on your tradingview.com interface. TradingView.com is free. Once you sign up on TradingView, go over to Master Charts Trading, sign up for trading indicators. Once you sign up, I will open the door for you. Notice I'm working on the yearly plans. I'm still trying to integrate them, but the prices are already up. So if you really need them now, send me a message. Newsletters, I send out daily alerts, and I send out weekly members only video. So once again, all of this various stocks will be covered in the members only video. I think the best deal, of course, is to get the trading indicators and newsletter as a package. Monthly price is at $59.95, but the yearly price is actually $49.95 per month. You get 2 free months basically if you sign up. It's coming up, but again, if you need to get a hold of me, go to Master Charts Trading, click on Help, and click on Contact. Again, if you have any questions, please let me know. Thank you for watching. Don't forget to spread the word. Make a comment, hit the like button, subscribe to this channel, share this video. Thank you for watching. Have another great trading week. Bye-bye.